Hello, thanks for joining our initial first episode of Sci-Fair Real Talk. We are your hosts. My name is Jim Mulholland.
And I am Rodney Jordan.
All right, well, hey, I'm excited about this, Rodney. Again, long time coming.
Yeah.
Thank you guys for listening out there. But again, my name is Jim Mulholland. It's my partner here, Rodney Jordan. I will. How about I give the folks a little information about me?
Yeah. Give us a little background.
So I am the broker owner of Cypher Real Estate. We've been in business since 2011. So we've had this office here off House and Hall in Cypress, Texas, since 2018. We have a team of roughly 15 agents and staff, and growing. A little of my background. I got an engineering degree from Texas A&M. Class of 1996. Did IT work for 15 years. Have a development background, doing a lot of web development. So kind of parlayed that into real estate.
Yeah.
And here we are. So, and then bing, ba boom, ba bang, and here we are now. Podcaster. So add that to my resume.
Yeah, look at that. The resume is still growing.
Podcaster.
As time goes.
Yes, absolutely. So how about you, Rodney?
Well, my career started, I'm renewing my license this month, 15 years.
Wow, congratulations.
15
that's awesome.
years here
great.
in the great state of Texas. A little bit about me, my background. I started my career in the United States Army, medical field. There, met my wife and grew a family, 2 boys.
Awesome.
And that was kind of the catalyst for me moving here to Houston and becoming in this market. Spent some years working in the home builder world. That was the bulk of my real estate career, is home builder. So a lot of stuff with developments, new communities, all those things, real estate. But this profession, this life is just very addictive, real estate. I think we like the change, the growth.
Yes.
It's just one of those things, but my time is, like I say, focusing on the development, the growth side of it, seeing this market changes and stuff like that. I mean, you've been doing it a long time yourself. How many years are you now?
My license, I think we're going on 20 years.
Wow.
Yeah, so 2004, 2005, sometime in that time frame. So yeah. So between us, we got 35 years of experience. So
when you say it, it sounds so. It sounds so long.
Why you guys need to tune in here every week. We got experience going to be leading you through the day to day of real estate.
Yeah.
And much more. Right? We got a lot more than just real estate. We're planning on talking about here in this podcast. So
keeping everyone updated. I think it's going to be worth the listen, worth tuning in, worth subscribing to, and being a part of. I'm glad we're doing this. We're sharing.
Yeah, me too.
We're sharing.
Yeah. So I guess that's a good segue into kind of the plan here for the podcast. So plan on releasing a new show later in the week, every week. So Thursday time frame is the goal. So
we've made ourselves accountable for that.
That's
a big part of it, the accountability.
So so every week we will give you a quick update on the market, whether it's looking at charts or some other status or what's going on with the real estate market, particularly in the Cypress area, Northwest Houston. But we'll look at Houston as a whole and maybe talk about other areas of the state and country. So that's a big part.
Well, I want to add one thing too. You're also, we're going to be talking about where you eat, work, and play. And live. How long have you guys been living in the Cypress market, your family?
So we've been in Cypress since 1999. So moved in Coles Crossing, got married in 99, immediately moved here to Cypress. So my lovely wife, Wendy, is actually part of our team here at Sci-Fair Real Estate. Moved into Coles Crossing in 99 and then lived there for 15 years, moved into Bridgeland, which is where we currently are, moved there in 2015. So, all good.
So I just wanted to let people know we're not talking from afar. We're talking where we live, eat, and play at.
Absolutely.
And our families and kids
day to day. We are living the Cypress lifestyle. So great place, by the way, if you're thinking about moving here. everyone loves Cypress. It's a good place. Got
Yeah.
great communities, great. Got lots of shopping with got a nice outlet mall and lots of other shopping. Everything you can want here. Lots of restaurants. Restaurants are growing. That was, I think, was one of the shortfalls there for a while.
Yeah.
But now even Bridgeland's trying to grow their city center, and so we have lots of options.
Yeah,
But,
I'm growing too since moving here to Cyprus.
Right.
With all the restaurants, there's
Right,
plenty
yeah,
of food
plenty
to
of
eat. So
options.
we all kind of grow and get put on the weight here.
Yes.
But lots of good food in the Cyprus area.
But yeah, so we'll talk about how's the market doing. We'll also just talk about the news, news not only in Cyprus but the real estate industry, what's going on with real estate, Cyprus, that kind of thing. So that'll be something we touch on every week, and then starting next episode, we'll also have a guest on.
Okay.
So whether that be one of our agents, spotlight an agent, or someone else in the real estate industry may come join us and have a conversation with us, and or just someone from the area. So someone else from the Cyprus area who may give some more insights for those people looking into Cyprus. But again, we're not all going to be Cyprus. I think we're going to be talking about a lot of different topics. So I think it's going to be a lot of fun.
Yeah, tune in.
So, did I miss anything else?
No, I think that got it. I think it sets the tone for us very well and what we're going to do. But let's go into our first segment, Jim. And you thought of this was kind of your brainchild. We were thinking about our segments and what we're going to be talking about. And you posed this question to me. You said, Rodney, when you let people know you're working real estate, they kind of ask you this one question. It comes up, and it's, how's the market?
How's the market?
How's the market?
Hey, I'm Jim. What do you do, Jim? I'm in real estate. How's the market?
How's the market? How is it?
It's always the first question.
Yeah.
Which I don't even know how you answer that, to be honest. It's
sometimes I base it on the weather. I go, it's a beautiful day. You know, that's how the market is.
It's kind of a trick question. But here, again, we want to discuss that, and we'll kind of go through a few different techniques. But the first one, we're actually going to use some charts.
Okay.
So here I got a chart. This is actually from scifairrealestate.com. If you go to scifairrealestate.com, you can kind of go click on the search menu right here, go down to community charts, and that's where we are. So currently we're just bringing in charts from 3 school districts. So it's kind of what we're starting off here with this data. This is all sold data within the Cy-Fair ISD, Tomball ISD, and Waller ISD.
Those are some big districts.
They're good districts.
Those are some big
well,
school
Tomball and Cy-Fair is one of the biggest in the state. You know, it's the 3rd biggest school district in the state.
I did not know that.
Yes, it's only you can name the top 2 biggest school districts in the state. We'll put you on the spot.
Let's see. You just gave me one, and that was number 3.
Number 3. Yeah.
I'm gonna say it has to be HISD?
Yes, HISD, I think, is number 1.
You know, I filled out my bracket today. I'm feeling kind of lucky.
So there you go.
HISD, and I'm going to say, those people up in Dallas may have something on us.
You got it,
Is someone
Dallas
up there?
ISD, Dallas ISD. So those are the top 2. Cy-Fair is number 3.
Nice.
So, I remember doing research. I have to go look at it again. But I remember if you did the population of Cy-Fair and put it in like the size of the city, it was like top 20th most populated city in the country.
Oh, boy.
I mean, that's how many people live in Cy-Fair. So Cy-Fair is a big district. But then Tomball is it's a good district growing.
Yeah.
Waller is still kind of rural, but everything's going out to Waller.
Yeah, the home builders are definitely going that way. We're seeing grand openings. Some of the agents are out heading to grand openings out in that area today. So
yeah, So
it's
a
busy
lot of good neighborhoods going up in Waller. And a lot of stuff out there. So those are the 3 we're kind of focusing on. I would say over half of the deals we work on, probably closer to 70%, are probably from those 3 districts, if not more. But anyway, so back to the market. So again, search community charts here on scifairrealestate.com. You can kind of see how the market's doing. This is data. This is sold homes starting in 2015. So again, we had a slight increase in values, and this is home price. But you can see COVID hit 2020, things just skyrocketed, right?
Oh, boy.
So if you look at March 2020, our average home price for these districts was about $260,000. And then back in April or May 2022, it was, I can't read that.
What do you got?
It's 378,000.
Oh boy,
my eyes aren't like they used to be,
boy.
Rodney. My eyes aren't.
Hey, we did tell them, we gave them a forewarn
Right.
that we got some age in between us and experience, and we call it character building.
Yeah, so basically to mid 200s to the upper 300s the average, and that's just for those districts.
Oh,
and
boy.
again, dollars per square foot, similar deal. So we could look at that. So the second chart there is dollars per square foot. So if we go to 2020 when COVID hit, I mean, we're looking at basically 115 to 120 a square foot. And then we went all the way up to 163 a square foot. And this is for all three combined. If we do Cypress, it's even a bigger contrast. But what's most interesting, this is probably my favorite chart down here, is the days on market. Because the market has a flow. It almost looks like waves in an ocean, does it not? But basically, this is the days on market, and this is when a house sells. But typically, if you're selling a house and you list it in December, November, it's going to take a while to sell in general, just anywhere, or at least anywhere where you have kids going to school, because people want to move in the summer. So here, the peak was always February, and then it would go down. So days on market about 60 days in February, and then
Look at that dip.
Yeah, it would dip down to about a month in July. Same the next year, right? And this is 2016. So 60 days down to 30 again. So every year, February is a peak, June, July is the trough, right?
Yeah.
Well, then COVID hits,
and look at what that did to the market.
Yeah.
Oh boy,
the trough was prolonged, so we never went back to that peak.
We went into a selling season and didn't come out.
Basically, everything was selling within a week or two for a couple of years, basically.
How was that? Can I ask on your experience? You lived that, had the brokerage and everything like that. Home selling that fast. How was that? How was that experience?
It was as a buyer's agent, it was horrible. Listing agent was okay, but as a buyer's agent, we actually lost buyer's agent here as a company because it was so frustrating.
Oh boy,
because you'd spend so much time showing houses, going out and about, driving clients around, and then everything was multiple offer situation. If you had a client that was an FHA or VA buyer, the odds of them getting a house were pretty slim. So everything was either going to be cash or a really high down payment conventional type loan, and you had to come in, add or over list, usually over list. And it was frustrating for a lot of buyers. It was frustrating for a lot of buyers agents. Again, sellers, it was good. You put anything down and it was selling. So it was a crazy time. I'm glad we're kind of back to a little normalcy. Because you can see again here, 2023, we were back up to about a little less than 2 months. It's 23.
Right there.
Yeah. So, and then this year we're actually a little lower. So it's almost like I'm kind of seeing, talking about how's the market. I think the market's actually going to be a little better this year than it was last year.
Yeah.
The peak is less than it was last year.
Yeah, we didn't have that big high.
Yeah.
We kind of just.
It's close, but it's still lower than it was last year, and it's lower than it was all the previous years before COVID. So. I think it's kind of setting up to be kind of start trending again to be more of a seller's market. I think buyers are kind of getting used to the interest rates. Something else we'll talk about here.
Yes.
And interest rates seem to be somewhat leveling off, and again we'll look at that here in a sec. But those things combined, I just think it's kind of looking good if you're going to be looking to sell a house over the next few months, at least in the Cypress area.
Yeah, and I'm seeing here on the chart it pulls that home sold volume there. At the bottom, look at these numbers.
It's been fairly steady, but you can kind of see, again, it peaks in the summer every year, but you can kind of see it's going up a bit. And again, Cypress is one of the fastest growing areas, in the country. So if we look at so I'm going to change it real quick, and we'll kind of change topics here in a second. But if I change it just into Cypress, you can see you can see the data here, and sales they've been pretty steady, but again, same trough on the days on market, and then the peaks on days on market this year are a little lower than last year. So, and something I do want to point out, we discussed this a little bit yesterday, but February actually the dollars per square foot in Cypress was an all-time high.
Wow.
So
Cypress was feeling the love in February.
Yeah, so 174 square foot total was the average per square foot in February. So that is an all-time high. So those people kind of who waiting for home prices to go down before they buy, it could be a little bit still. The interest rates are not affecting it that much. So.
Yeah, no, that's great news and everything like that. And again, for the people listening, we grabbed that off of our website, scifairrealestate.com.
Yes.
Right there under the search tab. Go play with it. You can dig into the data, kind of look at what Jim just reviewed, or you can just come back. We'll make sure we keep you updated and go over some things that is happening and get some feedback from the audience there of what they're looking at and what they want to see. You know, you guys help us drive this thing.
Yeah, absolutely. Absolutely. And again, this is, if you're listening to us via podcast and you want to see some of these charts, just find us on our YouTube channel, Sci-Fair Real Talk and Sci-Fair Real Estate. I'll have it on both. But, but yeah, so you can kind of see what we're looking at. But if not, we'll try to, paint the picture.
Okay.
Paint the picture, Rodney.
Yeah,
It's radio here, painting pictures.
So for that person that wants the bottom line up front on how's the market after you've reviewed it, what do you think, Jim?
I think the market is solid. I think it's going to be better. I think it's going to just keep getting better. Yep. So it's a seller's market. If you're a buyer, just be ready to don't wait on homes when they're listed if it's something that really fits your criteria. Definitely.
Don't wait.
Yeah, don't wait. Make a move. Make sure you have that pre-approval in hand from a lender. And make sure you have a good buyer's agent to help you out, discuss an offer, and get in quick. Because I have a feeling things are going to start selling here off pretty quick. Yeah. Especially interest rates, and that's kind of a good segue. Mm-hmm. We had the FOMC, the Federal Reserve.
The Feds.
Yeah, they had their meeting yesterday, and they were talking. Jerome Powell came and talked, and basically said that they're still planning on having 3 interest rate cuts this year. So the mortgage industry likes to hear that if you're wanting to keep rates down. And you can kind of see here, there's this is the blue line on this chart. This is a 30-year fixed mortgage rate chart. I'm on Mortgage News Daily. I'm hoping they can see this at home, but you can kind of see. We peaked here in last October. Interest rates about 8%.
Oh, wow.
And then, things dropped down in December, kind of bottomed out in September, about 6 and 6.5 about.
Okay.
And they've been slowly going up. Then we've had a little volatility here the last few weeks. But after the meeting yesterday, the Federal Reserve meeting, rates did drop down to about 6 3/4, 6 and 7/8.
Yeah, I was watching that. I think he really kind of said, we're going to wait and see, grab some more data, look at inflation. They were looking at some things and some other indicators before they made any adjustments, which I guess the market liked, right? Looks like Wall Street liked this as well.
Flying. Hell yeah. No, it's good. So that's so as long as that kind of keeps going status quo, they actually do the rate cuts. I kind of think this number is not going to go up anymore. It may actually come down. Again, when the Fed raises and lowers interest rate, stocks do not go, lock and key with that. Sometimes it's a delayed. Sometimes it doesn't move at all.
Yeah.
But yeah, one thing it does go, and it's kind of a good transition. It actually does do a good job following the 10-year U.S. Treasury yield.
Okay, let's dive into it.
So this is actually a chart from a stock trading program I use called TradingView. But this is a monthly chart. So again, the 10-year Treasury basically is about 2 to 3%, depending on the month, below what a 30-year mortgage rate is. So if you want to have a general idea what the trend is of a mortgage, 10-year Treasury is kind of a good way to look. Or you just, hey, what have things done this week, or what are they doing today? This is a kind of a good place to go.
Okay.
But to kind of see what's been happening here in the 10-year or with mortgage rates over the past 40 years, you can see.
So we definitely have plenty of data.
Yeah, so 40 years, this is over 40 years of data, but I'm just looking at the past 40 years because I'm looking at when things peaked during the early 80s. I remember talking to my parents about, having 15% mortgage rates and that kind of stuff. So, so that's was the peak. And for those that do technical analysis with stocks, you can do the same thing here with the yield. So so if you look at this, basically the yield's been going down since that 1981 almost perfectly. It's hitting off this downtrend line. So it hit it off of again in 84, and it hit it off again in 07, and then it hit it off again in 18. So it would kind of go down at the bottom part of the channel, and then it would hit off the top part of the channel. But it kept consistently going down over time since 1981. Okay. And then COVID happened.
Yes, I was going to ask you. I'm like, things seem to be moving, nicely, and then you got this this V written on that looks like it's popped out on the chart here.
So,
where we broke through. That was COVID.
That was COVID, and this is what's called a spring. If you're looking at the Wyckoff theory or different theories on technical analysis, what happened is the rates just completely plummeted down here. That's when people are getting 30-year mortgages at like 2.5, 2 3/4.
Yeah, I was
3% or less. Yeah, so we refinanced at that time. It was really good.
Yes,
definitely a good time to refinance there
Definitely.
in late 2020, early 2021. But you can see it all crater below that channel, and then it just completely skyrocketed. So that the point of the spring is, in technical analysis perspective, think of a ball just going between two rubber bands or two springs.
Okay.
And you want the ball to spring out of those two rubber bands. You need to pull and basically give it a spring for it to pop the other side. And that's exactly what COVID caused.
Yeah, COVID was a big spring there.
It's a big spring. Came out of it. This is called a retest. It retested here, the top of the previous highs, and then just went back up. So where we are here in terms of the 10-year Treasury, which, and again, kind of dictates where we think mortgage rates are going, we're on this big uptrend. We've been in an uptrend since that end of 2020. Okay. But it's bouncing off the bottom of the channel here.
Yeah.
I was kind of hoping that the meeting yesterday would make it kind of break through in the bottom of the channel. That has not happened. But that's kind of something to watch. So again, this is a monthly chart. So each one of these candles is a month of data.
Okay.
So it's bouncing off the bottom of this line. So you want it to break through, and possibly then if that happens, it could go down. If we change it to, so I just changed the chart to where every candle is now 1 day.
Okay.
So you can kind of see how it's been bouncing off of this basically 4 1/4, which basically puts at 4.3, kind of right around the. If you add 3 again, you're talking about the 7 to 7 1/4 interest.
Yeah, the math is mathing.
It's been bouncing down off of this. It's called resistance. So we'd want it to kind of hold that resistance. And again, if we were looking for lower interest rates, again, if you're a saver, you want higher interest rates, right? But for those people looking to get a mortgage, lower interest rates, this resistance is a good thing. You just don't want it to go above that and kind of eventually break below that uptrend. So anyway, this is called a wedge. So you can kind of see how this looks like a wedge. Yeah. So it's got to break through this wedge, and there's a good chance when it breaks through, it's going to keep going whatever direction it breaks through.
Are there any events or things that we had COVID as an example, but are there any examples you think that kind of cause those? Would supply and demand have an impact on that? What do you think impacts some of that things, or is it just buyer sentiment, home builder sentiment? Is it what do you think?
I think it's basically going to be inflation.
Okay.
At this point, you're just looking at the CPI numbers and inflation. That's going to dictate the Fed and their rates, if they're going to be dropping the rates or not, right? Yeah. So that's. Well, and to a lesser extent, the job reports. It's one of those weird things that really worse job reports are better for the mortgage rates, because the more people that have jobs, the more those people are spending money. Yeah. Which means the more likely prices are going to go up, which means they're going to have to keep the rates up because they don't want inflation to get out of hand again. So anyway, those are things that's why job reports, CPI numbers, FOMC meetings, those are all important for for the stock market and for mortgage rates and that kind of stuff. So.
Yeah. And boy, it also pays to have an agent that is in tune with what's going on in the market. All of these things, as far as supply and demand, housing supplies, interest rates, what's going on. It all just goes in together to a home purchase or a home sold. So definitely a lot of data. We'll try our best to keep you updated. Watch out for any Sentinel events or anything, and we'll bring it to you here.
Every week, and everything happens here. That's right. We'll give everyone the update. So
yeah, I'll definitely go, Jim, what's going on with the market? You can
How's
say,
the
all
market?
right. And we'll break out the chart, and we won't just lay an opinion. We'll show some charts and data that back those things up, kind of like the CMA. Awesome.
I love data. I love data, my friend. So.
Well, we like learning, and I hope our listeners enjoy that too, and that perspective of things and stuff. Well, you had mentioned earlier, right before we had got into it, we kind of touched on the Fed and kind of some of the news that is out there in the market, and I know everybody's probably like, are there any elephants in the room that you guys want to talk about? And yes, we've heard the Fed data, and we also know that we've had some reports and things going on in the real estate community from the National Association of Realtors.
Yes, big news.
What's going on?
Yeah, so big settlement with NAR. It's not official yet, but basically the NAR settled a lawsuit. They're going to pay like $419 million. Is that what it is? 400 something
in there. Yeah. Hey?
I don't know.
There you go.
I can't hear. I got headphones.
Yeah, I think you said 418.
Oh, 418. Thank you, Amy.
Thank you.
Our office manager, Amy Denton.
Yes.
Thank you for participating. So she says 418,000.
Oh, yeah. Well, she's normally right. She's normally right for us.
So we appreciate that. But yeah, so big. So not only does the National Association of Realtors, which every realtor in the country has to be a member of, which we are. So they're going to owe a lot of money. But the bigger news is there's could be a hit to buyer's agents, possibly. So basically, the big part of it is every MLS, I'm assuming every MLS, I know HAR does, and all the other major ones, they have a field that shows how much a seller is willing to pay a buyer's agent, or this listing agent is willing to pay the buyer's agent in terms of percent of sales price towards their commission. Okay. So here in Houston area, it's typically 3%, 2.5%, 3%. A seller. So basically, a seller agrees to pay a commission to the listing agent. The listing agent basically agrees to split that with the buyer's agent.
Sure.
So as part of the settlement, assuming it's all approved by the judge and all the judicial system, that field's going away. So most of what you're hearing on TV is basically one field in one form going away. And that's it. So literally, it's going to take a developer all of 10 seconds to go and delete that, and they may even just make it hidden. As a developer, a lot of times, this field may be coming back. I'm not going to delete it. I won't even take it out of the database. I'm just going to make that field hidden, so you can't use it right now, but it may be coming back. So that's basically what that is we're hiding one field. So so buyers agents, I guess the gist of the lawsuit was they thought a lot of buyers agents were dictating what houses to show their buyers based on how much commission was being given on that. So that's with that going away. It's kind of a whole new set of potential issues, or it's going to be a definitely different processes for a buyer's agent.
A lot of research on the front end, which we do. That's part of your due diligence when you're out showing homes. Oftentimes we get what we call them showing requests or more information requests. Our agents are busy. If you hear the doors going, because they're in and out, and they're out in the field showing homes, but just doing the due diligence, finding out about the home, more communication between the buyer agent and listing agent I can see happening now. And it's one of those things that I don't think real estate's going anywhere. I've seen some scary headlines, but I don't think. Are you planning on going anywhere? No, I know we're still here.
Yeah, I mean, a lot of headlines. Buyers agents aren't going away, or they're not going to get their money. I don't think that can't happen. I mean, if that happens, I'm concerned about what the market would do if listing agents get to dictate all the pricing and buyers agents aren't there to help. But there are things. I think the lending industry is going to have to change a bit if this does happen. I think there's going to have to be some rules that are going to have to change in terms of lenders are going to have to. Right now, lenders do not pay for commissions at all. They will not pay for buyer's commission, even though they're kind of are, since the buyer's commission is in part of the sales price. But as a rule, they can't pay the buyer's commission. VAs, if you are a veteran, thank you for your service again, Rodney.
Thank you.
And you use a VA loan, the VA will not let you pay your commissions out of your own pocket. So a VA is not allowed to pay commissions. So basically, this is saying if a seller is not willing to pay a VA's commission, a VA cannot use a realtor to buy a house. So which doesn't make any sense. So those kind of things have to to change.
It's a little early, is what I'm hearing.
Yeah.
It's a little early.
And then there's that, and obviously I'm not completely in tune with this. There's may be a lot of things I don't understand completely, but I think there's a lot of stuff to iron out. But it's definitely something that's going to be interesting. I know HAR sent out a communication last week about. They're highlighting July as potentially when the actual field is hidden or taken out of MLS.
I saw that. So we got a few months. Looks like everyone's kind of letting more data come in, and we're measuring this thing and figuring out the new how-to. I mean, we still got to do it. We still have to do the what we do and help our customers and clients. It's just figuring out the how-to and the best way that serves our customers and our clients, and both sides, sellers and buyers. And I think once we figure it out, we may not be as scary as we think.
Yeah, the other change, I think maybe a good change is that all buyers are going to have to sign a buyer's agent agreement before they even start looking at houses, which I think that's probably a good thing. Currently, it's not done very often because it scares buyers away. They don't want to be, what is this? I don't want to be, I'm just looking at a house. I don't want to have to, be bound to any kind of contract. But now it's going to be literally the law for me to go show you a house. You have to sign this agreement. So that kind of puts in black and white on the table. And I know everyone's doing it right. So it's not like, all right, they're going to, okay, I'm not going to use you, Jim. I'll go use Joe down the street because he's not going to force me to do that. Not the case. Joe would have to force you to do that. Otherwise, he could lose his license. So I think that's kind of a good thing. But anyway, lot of moving parts there, and we're not really completely sure what's going on. But we'll keep everyone obviously abreast as time goes on.
So to be continued.
Exactly.
There you go. All right. Well,
and you know what? We forgot to intro that with real news.
Oh, let's see if we can do it in unison. Let's get that. What are we going to call it? Real news.
So every week that's a real news.
Someone just hit the subscribe button. I felt something, and I think it's all the people subscribing,
like, and subscribe,
and share. They're going, I'm in.
These guys know what they're talking about.
They got it. They got it. All right. Well, any closing remarks? Anything you want to share? Any thoughts?
So this will be the time where we'd be asking more interview questions with the guests again. Initial show, inaugural Cypher Real Talk show. We don't have a guest today because we wanted all of our audience to get to know Rodney and Jim. But typically right now we'll be interviewing someone, asking questions, getting more information about this particular guest. We're not doing that today, but that's kind of how we would end off. In a usual week. So, but no, I think this has gone good.
I like it. I'm ready. So, I'm already ready for the next one. So make sure you like, share, and subscribe. I'm just giving you a
follow
reminder.
us on the podcast. We're Spotify, Apple Podcasts. And we'll know more as this goes along. Where else you can find us. But,
one thing I'll tell you, Jim, it only gets better.
Oh, yeah.
We're only going to get better.
We're just still figuring this out.
We're only going to get better.
Stuff out. Oh, yeah. No, it's
there
going to be amazing. It's going to be great. We're going to rule the Northwest Houston Cypress area podcast community. The most watched podcast in the Cypress real estate community. 7743, baby. That's the goal. So it's going to be amazing. Yeah, it's going to be great. Okay.
Yeah.
Well, hey, Rodney, it's been a pleasure. I appreciate it.
It's been an absolute pleasure.
First episode. So thank you guys for joining.
Boom.
We appreciate it. I think we will see you next time again. My name's Jim Mulholland.
And I'm Rodney Jordan.
And this is Sci-Fi Real Talk. We'll see you next time. Bye.